See, this is what I call the fiat perpetual war cycle. And what happens is that the currency marketplace, the FX marketplace, what it allows countries to do is to issue their debt. And ultimately, what that does is it creates demand for dollars. So basically, because of dollar denominated debt, there's almost an unlimited bid on dollars. So what that does is at some point in time or another, that demand hits the dollar. When the demand hits the dollar, DXY goes up. Well, when DXY goes up, the treasury can issue more debt. And yeah, it'll make DXY go down, but it's really just offsetting the positive pressure that was created through all the dollar denominated debt. So if you keep going through that process, you can fund war perpetually, right? Because a country will issue a treasury or a debt note and use that money to pay for the war, and they'll issue it in the imagine there's the FX market, it's the currency market. It's like Bitcoin, it's its own marketplace. Well, governments have currency markets that are their own marketplace, and fiat makes it possible. So the entire fiat system is based on war. But what we're seeing right now is a world war between the parties within that system. So we have a perpetual war system, and then we have the parties within that system now fighting and jockeying for a position with each other. And the whole name of the game is for BRICS, who could never beat the dollar. I mean, I don't care what BRICS does. There's nothing that they can do. Even if they back their currency with gold, it's not going to threaten the dollar, because countries aren't issuing debt that creates demand on BRICS currency. It's dollar denominated debt. And yeah, this is a just to show you. A lot of people say that DXY. If you notice, in 2021 we had all-time high inflation, right? But what was the dollar doing? It went up. It went up. Look, when the Fed started raising interest rates. Well, have they stopped raising interest rates? No. But look at the channel that we were in up until recently. It was going down. So we had disinflation, or we had inflation at a slower rate, and DXY went down. Be careful out there who you're listening to, who's people that use DXY to try to see what price trends are going to happen for assets, or what's going to happen with inflation. Because, when the dollar went up, you'd think prices would go down. But at the same time the dollar went up, we had all-time high inflation. And then starting in October, something happened, the trend changed, and we had disinflation, right? Official inflation went down from 9 all the way down to where we are now, but the dollar went down too. So you have to be careful where you're looking at here. And that neckline there is the head and shoulders pattern. And actually the updated chart is we've broken below that. So the dollar is getting a little bit weaker right now. And I think that's because people are anticipating that they're going to lower rates, but they're not going to lower rates because they're trying to fight the prices, right? So that goes back to the original conversation we had. And as they're fighting those rates, they're issuing treasuries. The rest of the world, the World War III is economic and being fought in the field of finance, because the rest of the world sees what's happening and is saying, well, we can't beat the dollar, but what we can do is we can reduce the amount of demand on the dollar. And that's really their strategy. Their goal is, let's reduce the amount of demand on the dollar. And as they reduce the overall amount of demand on the dollar, slowly but surely, like a war of attrition, and at the same time, the United States government is increasing the supply. Well, look, the natural laws of economics that apply equally all over the world tell us that when supply goes up and demand goes down, price goes down. So yields are going to skyrocket. Yields are going to go up, because as the note and bond prices go down, because the supply is going up, at the same time the demand is going down, the bond and note prices are going to go down, which pushes the yield up. So there's really nothing that they can do except control the narrative and maintain people's trust. And that's why I think it's important for people to start talking about financial COVID, because we have a data problem here. And if we can fix this data problem, like a fallen angel standing in front of God, we'll be able to see through the facade. We will be able to see that is not a real angel, it's a fallen angel. We'll be able to see that the economy is not that strong. We were in an artificial depression, where since then we've been in recession. And by the end of the year, if real GDP doesn't turn positive, we will be in a real depression. And then the next step of that is, well, are they going to let everything fall apart? They're not going to let everything fall apart. if they were going to let everything fall apart, it would have already fell apart in March, right? The banks are already bankrupt. Everybody's sitting around like, oh, everything's okay. Nothing crazy happened. The banks are bankrupt. Your money's gone. They took your money. They went out the yield curve, and then all of that mark-to-market value is gone. So they have a couple of accounting trips where oh, well, we're not going to sell that 30-year bond until we have to. So we mark it down as a hold to maturity value. So yeah, even though it's $1 billion bond and right now it's only worth 600 million, well, we don't care. On our book, it's still worth $1 billion. On our book, that bond is still backing $1 billion of our customers' deposits, right? So in March, when the customers came back and said, hey, we want our money because you're paying us 0.1% and this money market fund is going to offer me 5%. So I want my money. I want to take my money over to them where I can get 5 instead of 0.1. Well, the banks, where are they supposed to get the money? They have to sell the collateral, the not pristine collateral that lost all its value. They have to sell it. Well, they have to sell it at a loss, right? So hold to maturity accounting only works until it doesn't. And that's why the Federal Reserve, if they were going to let everything de-lever, if they were going to take the leverage out of the system, if we were going to experience deflationary price action, it would have happened in March because they would have never created the bank term funding program. The bank term funding program from the Federal Reserve said, hey guys, we know that you need the money for your asset in order to cover your customers' deposit liabilities. And we also understand that if you took that asset and went to market, you would go bankrupt. You're insolvent. So in order to keep you from failing, you can just bring that collateral to us and we're going to pretend that it's pristine. We're going to pretend that it's par value. So yeah, that bond that you paid $1 billion for is now only worth 600 million. But if you come to us, we'll let you borrow from that. We'll let you use it as collateral and we'll value it at par. We'll value it at the billion. That way the bank could get the full billion that they needed to give to their customers so they could go where they wanted to go. And that bank term funding program is the proof that if they wanted the system to delever, if they wanted to create a deflationary scenario, then that's when they would have let it happen. But they didn't. They created the program and they maintained the status quo. And a lot of people say, well, what's that mean, CJ? Like, what? How can they do that? How is this happening? Why is it happening? Well, it's because we don't live in a democracy anymore. We had a republic. It devolved into a democracy, and then it devolved into kleptocracy. And for people who don't know, a kleptocracy is simply a body of power elites who fight over the power of the purse, right? Because the government, through a vote, has the right to create money. They can print money out of thin air. And unfortunately, that's where we are right now. The politicians don't care about the people. They care about the people who pay their bills and get them elected and donate to them. So when they get those donations and they get that backing, they make a promise to that person. Oh yeah, sure, no problem. We're going to get money for solar panels. We're going to do this. We're going to do that. And then when they get to DC, they talk to other politicians that say, well, look, I don't really give two craps about your constituents, and you don't really give two craps about my constituents, but we have one thing in common. Your constituents need money and my constituents need money. So if you support me, I'll support you. That's how you get multi-thousand-page bills with all this different stuff. You'll notice there's never a bill that passes with just one thing in it because not everybody cares about that one person or that one thing. What they care about has to be included into the bill. So thousands of cares are forced into these bills so that everybody gets a piece of the treasure pot, a piece of the piggy bank. No one person can get a piece of the piggy bank. If you're going to reach in the piggy bank, we're all going to reach in the piggy bank at the same time. And that's how it works. So it's a kleptocracy. It's about a group of power brokers who have access to the printers, basically. And they sell that access to the printer. And that's really where we're at right now. I don't think they want to destroy the system. I don't think they want to do some big reset. I don't think they're that organized, or at least I hope and pray they're not that organized. I think it's just kleptocracy. It's everybody looking out for themselves to maintain the status quo. Because as long as they can maintain the status quo, they all get to keep picking out of the piggy bank, right? If everybody's happy, even if we create some inflation, even if whatever the consequences are, they don't care because it's about maintaining the status quo, because the status quo is what allows them to keep picking from the piggy bank. If we adopt Bitcoin, if we, the people, step up and say, we're not going to let you pick from the piggy bank anymore. Well, how are we going to do that? Are we going to do that violently? No, of course not. Most of us have families and kids, and we just want to live life peaceably. We're not interested in violence. Bitcoin is a peaceful revolution. And the reason is because the way Bitcoin is created, it takes away their ability to raid the piggy bank, right? They can only ever spend what they collect in tax. They can't spend more, and they can't create more Bitcoin and spend it into circulation. It takes away the power of the purse. It gets rid of this kleptocracy and gets those politicians back into the mindset of being a servant to we the people, rather than stealing through inflation from we the people. And that's why Bitcoin is the solution to the inflation problem. It takes away the power of the purse, and that's what's most important in a kleptocracy like we have today, the power of the purse. So the status quo is going to remain. They're always going to take the politically expedient solution because it maintains the status quo. Nobody wants to do the tough and right thing and let companies fail, right? Too big to fail. Where did that come from? Too big to fail came from, well, shit, if they're too big to fail and then they actually fail, we lose the status quo. So we got to do what we got to do to maintain the status quo. And in 2008, it was pretty bad, but since COVID, it's gone to a whole nother level. It's gone to, I think the dollar supply, nobody really knows for sure, but based on my research, since 2020, the dollar supply has been expanded upwards of 80%. So it's no rhyme or reason or wonder why prices keep going up, even if inflation has gone down from 9% to 3.7%. That doesn't mean the prices went down. That means the prices are still going up. They're just going up a little bit slower. And the reason they're going up a little bit slower is because they raised interest rates. And when they raised interest rates, the dollar gained a little bit of strength in there, right? So there was a temporary reprieve through the effects of raising interest rates. But now those effects are going away because they've reached a cap. They've reached a limit on interest rates.